Or I just want to invest. I want to invest to make money. I want to invest to make money. I want to invest to make money. And a lot of times we find ourselves making bad investment decisions. And what saved me was my approach was different. We live in times where there's inflation, there's currency devaluation. You need to invest in assets that grow with inflation. Hello everyone and welcome back to my channel. Now, I'm so excited about what we're going to talk about today. Why? Because I believe that this is something a lot of people struggle with. How to build an investment portfolio. And this might seem like regular, but I find that a lot of people are just so focused on, oh, I just want to invest. I want to invest to make money. I want to invest to make money. I want to invest to make money. And a lot of times we find ourselves making bad investment decisions. And what do I mean by bad investment decisions? Investing in scams. Yes, investing in scams. And while I haven't invested in scams, praise the Lord, but I do have some experience in investing my money in something and losing my money. I told you, I have lost almost $1 million in investments. And I can share a lot about that. But my approach, what saved me was my approach was different. My approach was, I am building an investment portfolio. I am not simply investing to make money, or I am just, oh, somebody's going to give me this 30% here, somebody's going to give me 20% here, or this stock is going to double in 5 days, or this crypto is going to double in 5 days. No, guys, that is simply just chasing, the next big thing. Building an investment portfolio is a very different approach. It requires that you really sit down to think about who you are. Yes, it sounds very silly, right? But who am I as a person? What's my approach to risk? Do I really like taking risk, or am I simply someone that just follows the herd mentality? Everybody's doing this, let me put my money to them, make some money. No. Or am I someone that I just like, I want to sleep at night, not having to, have hypertension because I put my money in an investment? If that's you, then maybe you are low risk. Maybe you still have to take some tests to, know your risk profile. Then how much money do you have, right? What's your financial budget? There's some things you have to consider before you can invest in some things. And then of course your stage of life. All of these are factors that help you determine how best to build an investment portfolio, right? Are you in your 20s single, or are you in your 30s and you're married? Very different approach. You know why? Because when you're at 30s and you're married, you do need cash flow. Why? Because you're going to be paying school fees, your children are going to be eating every day, you're going to be spending money every single day. Honestly, I don't think it stops until that child leaves your house, And honestly, I really appreciate my parents right now. I am a mother of 3 children, right? So I know exactly how it feels to just, spending. But that's the stage of life that I am at. So what stage of life are you at? If you're at a stage of life where you don't have that responsibility, maybe it's time to, think different about your approach to building an investment portfolio, right? And, what I really want to talk about today, in addition to building an investment portfolio, is build an investment portfolio in uncertain times. Now, what do I mean by uncertain times? We live in times where there's inflation, there's currency devaluation on a regular basis. Now, you might live in a developed country where you're not seeing currency devaluation, but there's still inflation. I think it's global, like that things are just more expensive than they used to be before COVID. I don't know what happened, but as an economist, I do know what happened. But we've just found that things are just a lot more expensive. Supply chain issues, so many things have just affected our ability to buy things at the same price. And of course, a lot more money was pushed into the economy. A lot more people have more money to spend. So there's just a lot of money chasing the same amount of goods. And if you understand inflation, that's what inflation is. Inflation is simply a general increase in the prices of things. Why? Because there's a lot more money in circulation. That's really the simplest way I can explain inflation to you. But there are some other contexts to inflation. And what we have in this part of the world is a cost-push inflation. What does that mean? It basically means that because we are so dependent on imports, as our currency has devalued, imports are a lot more expensive. And because imports are a lot more expensive, there's a general rise in prices of goods and services. There are also other factors like the cost of fuel has increased because subsidy has been taken off. While I do not want to make this an economics class, I'm trying to make you understand in very simple terms how you have to consider the economic times that we live in your approach to building an investment portfolio. And honestly, it definitely helps you in making better informed investment decisions, right? So what is really the impact of inflation, right? Basically, it reduces your purchasing power, right? If you've gone to the supermarket recently, you know that you need to spend more money to buy the same things you've always bought. You're spending probably double or triple that amount of money. So that's what it does. It reduces your purchasing power. And you know, if you're someone that invests in a fixed income security as well, basically what's happening is that what you're earning as a fixed interest is reducing. So think about securities like maybe your treasury bills or your stocks. I mean, treasury bills are even more variable. Let's even talk about your bond, for instance. If you invested in a bond, a 5-year bond, and maybe at the time that you invested in the bond, inflation was 15%. Let's just use that as an example. And then right now you have inflation at 30 to 40%. So if you were getting a 5% at that time, what you are getting now, because inflation is higher, is a lot less in terms of the amount of money you're getting, your ability to spend it, right? So that's really the impact of inflation. Then of course, we look at currency devaluation. How does that affect us and your approach to building an investment portfolio? Basically, it means that even whatever amount of money you make from your investment has lost value, because especially if you compare it to other currencies in other countries. And we live in a global society right now. A lot of us shop on Amazon, global e-commerce sites. So if you're buying something in a different currency, maybe in dollars or in pounds or in euros, you know that you're actually having to take a lot more naira. I live in Lagos, Nigeria, so I'm going to speak a lot about the currency I spend with here. You're going to be spending a lot more, using a lot more naira. So it basically affects your ability to buy things that are, you know, in foreign currency, right? And all of that is just to let you know that, look, when you're building an investment portfolio, there are 3 things you need to consider. 1, you need to invest in assets that grow with inflation. A lot of people don't actually think about it. You know, you just think, oh, let me just invest in this because it's cool. Or let me just invest in that because it's cool. No, you have to consider the fact that inflation has been rising and will most likely continue to rise. If you live in Nigeria, we know that the president just signed an increase in minimum wage into law. What does that mean? More people have more cash in their hands. So that just means there's going to be more inflation. It's not going down anytime soon. The price of fuel also continues to go up. I mean, if you look at news headlines, you see that the IOCs and NNPC and all of the refineries are going back and forth. You've been seeing queues at fuel stations. Basically, what that means is there might just be a likely increase in the price of fuel. And when all of these things keep going up, increase in price of things, it means that, you know, you're having to have to dole out more cash to spend more. And basically, that means inflation will probably continue to rise and we might not be able to control it. We might try to keep it stable, but it probably won't go down, right? It probably will not drop. So how would you think about building an investment portfolio? Consider assets that grow with inflation. Now, I would say consider stocks. And when I say stocks, there's still context to stocks. Because even in the stock market, there are companies that they can increase the prices of the goods and services they sell as inflation grows. So most likely you'll find that companies that, you know, that work in or are in industries like maybe the food industry or some other, you know, FMCG industry, as inflation grows, they can increase the prices of what they sell. So that basically means that their margins will not be affected to a large extent. So basically, a company that is in an industry that they can't just increase the price of their goods will probably be affected, right? So you have to consider that very carefully when you're considering the stocks that you decide to invest in. So consider stocks that, you know, even in inflationary times, they continue to grow. Now, one interesting fact is, if you've seen any of my previous videos, you see that the banks in Nigeria somehow continue to report crazy profits. And in spite of what's happening in the environment, now there's a lot to dig into that. A lot of people feel like banks, you know, are making a lot of crazy profits because they're taking advantage of the economy. They have a lot of FX profits, but I'm not going into that in this video. There's a lot of argument back and forth on that, right? But if you're considering stocks, basically the principle is consider stocks and companies that will continue to grow in spite of inflation, and that's because they can push back the effects of inflation on the consumer and therefore continue to keep their margins. I hope that helps. If not, drop a question or a comment in the section and we will do a video to break it down further. Now, real estate is another asset that will continue to grow in spite of inflation or with inflation. Because like I said, we don't see inflation dropping anytime soon. So what assets should you consider adding to your portfolio so that even as inflation is growing or even stable, your asset is also growing? Now, real estate is one asset class that continues to grow with inflation. Why? Because there's always demand. People always want to, you know, live in houses, even in terms of rental value, in terms of the purchase value of the real estate. We find that as inflation goes up, the value on the cost of purchasing real estate continues to grow. So if you already own real estate, for instance, I'm sure the value, if you get a valuer to value your real estate, what it was valued at 2 or 3 years ago is not the same value that it is today, and will not be the same value 5 years ago. And this is why a lot of investors or financial advisors consider real estate a stable asset class to add to your portfolio, because it basically grows with inflation. Now, another asset class which is not so popular that grows with inflation is commodities. Now, when I say commodities, I mean, you could speak about agricultural commodities, which I will stick to, because I know people consider commodities such as, gold or all of those things that you can mine, but that's a different market entirely, and not all of us have access to those markets. You can invest in some gold indexes, but let's not talk about that today. I will focus on agricultural commodities because it is food. A lot of them are inputs into other, FMCG products. So as, inflation rises, you find that commodities also rise in prices. Now, there are commodity exchanges where you can invest in commodities, right? We have the Lagos Commodity Exchange, and you have companies like Afex that provide an opportunity for investors like you and I to invest in commodities. Now, those three asset classes we see, they continue to grow with inflation. So if you are building an investment portfolio in these times, make sure you're considering how to add those assets to your portfolio. Now, a second strategy to building your investment portfolio when you have inflation is to diversify your portfolio, of course, right? You don't want to have just all of your eggs in one basket. You don't want, even if you're considering investing in securities, you don't want to invest only in fixed securities, or you don't want to invest only in one particular stock, or even if you're investing in the stock market only in one industry, or if you're investing in real estate only in one market. You don't have to invest in real estate only in Nigeria. You can invest in real estate in the UK. You can invest in real estate in the US. I have done this personally, and I'm looking forward to sharing all my stories with investing in Nigeria, investing in the UK, and also investing in the US as well. Very different markets, but you find out that you do have inflation in those markets as well. But you have to consider differently how you invest in those markets. Why? Because in Nigeria, you have, for instance, scarcity. So the rate of inflation is high, and the rate of increase in the value of real estate is also high. But what you also find is that not a lot of people can afford a lot of the real estate purchase values that you have in Nigeria, right? So there are very limited people that can actually put down the money to buy a lot of this real estate. So you have, real estate that is just sitting down in the market, highly priced, and nobody is buying them. And then you also consider the fact that the Naira continues to devalue. So maybe you should consider another market. In the UK, for instance, you find that very different ballgame when you're doing residential versus commercial. If you live in the UK, you know all about this. And in the US, every state is different. And even within some states, there's some particular areas that have HOA rules, very different. If you're considering Airbnb, different rules apply. So very different markets. And I will do a video to break all of that down. But for now, let's just understand that you need to diversify your portfolio as a strategy to building a portfolio in uncertain times. Now, my final point is you need to stay informed. It's not okay to say that, oh, I don't understand economics, or I don't understand all these things. Every news headline potentially affects your investment decisions, right? Think about it, right? Just the fact that, right now there's a lot of talk about, what's happening with fuel in Nigeria. Your ability to purchase fuel is affected because the fuel lines are growing. All of that affects your investment decisions. So you should consider that if the fuel price is going to increase, that means I'm going to be spending more money. Should I consider, investing in an asset that provides cash flow that is above inflation? Or should I consider investing in another market if I want to send my children to school abroad? All of those things affect your ability to, evolve as a person. So please, it's very important you stay informed and ask questions. Reach out to financial advisors, join communities that, provide all of this information and educate you on how to ensure that even as you build an investment portfolio, considering the factors that I shared, your budget, your risk appetite, your stage of life, the three strategies that I shared, you consider as well, which is 1, invest in assets that tend to grow with inflation. 2, diversify your portfolio, ensure you're considering multiple assets. Basically, your goal is to, build a portfolio that gives you the best as much as possible in terms of returns based on inflation, in spite of inflation. And of course, stay informed. Now, one way to stay informed is to subscribe to this channel. I'm going to be breaking down a lot of, sharing a lot of information about, economic indices and how they affect your ability to make investment decisions. And I'll also be sharing my stories. Right now, I'm just building up on the series. The next couple of videos, I'll be sharing with you stories of my investment decisions, the good, the bad, the ugly. So you don't want to miss this. Subscribe and please leave a comment in the comment section and share as well. See you in the next video.